Welcome back to Boni's Life, where we turn market chaos into trading opportunities. I'm Boni, and if you're watching this on June 26th, 2025, you're about to witness something extraordinary. Bitcoin just kissed $108,000. Institutional money is flooding in like a tsunami, and the Federal Reserve just dropped a bombshell that could change everything. But here's the kicker. While everyone's celebrating, the next 24 hours could determine whether we're heading to $115,000 or taking a detour back to $104,000. Stick around because today we're diving deep into the technical triggers, the institutional chess moves, and the exact strategy I'm using to navigate these waters. And yes, I'll tell you exactly what Arthur Hayes, the guy who called Bitcoin's $20,000 rally in 2017, thinks is about to happen next. Let's start with the elephant in the room. Bitcoin is currently trading at $107,348. And if you think that's just another number, you're missing the bigger picture. This isn't your typical crypto pump. This is institutional validation on steroids. Here's what happened in the last 24 hours that has me absolutely bullish. The Federal Reserve on June 25th dropped the reputational risk rule from bank examinations. Now, I know that sounds boring, but let me break this down for you. This rule was basically the Fed's way of saying, hey, banks, if you touch crypto, we're going to give you a hard time. Well, guess what? That roadblock just disappeared. Think about it. We've gone from banks being scared to even mention Bitcoin to them actively exploring how to integrate it into their operations. JP Morgan, Bank of America, Wells Fargo, they can now openly embrace crypto without regulatory backlash. This is the institutional floodgates opening, and we're just getting started. But wait, there's more. The Genius Stablecoin Act just passed the Senate with a 68-30 vote and is heading to the House. This isn't just regulatory clarity. This is the government essentially saying, we're building the infrastructure for crypto to become mainstream. When banks can convert their cash reserves into stable coins, we're talking about trillions of dollars of potential liquidity entering our market. Now, let's get into the charts because the technicals are absolutely screaming right now. Looking at the daily Bitcoin chart, we're seeing a textbook consolidation pattern between $104,000 and $110,000. But here's what most traders are missing. This isn't just any consolidation, this is accumulation. The volume profile shows massive institutional buying at these levels. We're talking about BlackRock adding 4,130 Bitcoin in a single day. That's $436 million worth. When the world's largest asset manager is buying the dip, you know something big is brewing. And from a technical perspective, we have three key levels to watch in the next 24 hours. First, the immediate resistance at $108,500. This is where we've been rejected twice in the past week, but here's the thing. Each rejection has been weaker than the last. The selling pressure is diminishing, which tells me we're setting up for a breakout. Second, if we break $108,500 with conviction, the next target is $111,000. This level has massive liquidity clusters, and according to Satvik Vishwanath from Altcoin, a decisive move above $108,500 could trigger momentum toward $112,000 to $115,000. That's a potential 7% move in the next 24 to 48 hours. Third, and this is crucial for risk management, our support level sits at $104,000. This is where the institutional buyers have been stepping in. And it's our line in the sand. If we lose this level, we could see a deeper correction to $100,000. The RSI is sitting at 58, which gives us plenty of room to run higher without being overbought. The MACD is showing bullish divergence, and the 50-day moving average is acting as dynamic support. All signs point to upward momentum. But technical analysis is only half the story. The fundamentals are what's really driving this market, and they're absolutely explosive right now. Let's talk about institutional adoption because the numbers are staggering. The crypto market cap has surged 43% to $3.29 trillion, adding $1 trillion in value over the past year. Bitcoin's market cap alone has increased by 74.7% to $2.13 trillion, now representing 60% of the entire crypto market. Here's what's really interesting. While Bitcoin is dominating, Ethereum has actually lost ground, dropping 28% in market cap. This tells me that institutional money is laser-focused on Bitcoin as the primary store of value. It's digital gold, and institutions are treating it as such. The ETF flows are absolutely mind-blowing. On June 24th alone, we saw $659 million in net inflows, the largest single-day influx on record. BlackRock's IBITEFT now holds 683,185 Bitcoin, worth over $73 billion. That's more Bitcoin than most countries will ever own. But here's the kicker. MicroStrategy, led by Michael Saylor, holds a similar amount. Between just these two entities, we're talking about over 1.1 million Bitcoin locked away in institutional hands. That's roughly 5.5% of Bitcoin's total supply, controlled by two players who have zero intention of selling. Now let me share what the smartest minds in crypto are saying about what's coming next, because their insights are absolutely crucial for our 24-hour strategy. Arthur Hayes, the former BitMEX co-founder who correctly called Bitcoin's rally to $20,000 in 2017, just dropped a bombshell analysis. He's calling Bitcoin's next all-time high inevitable based on three key catalysts. First, the US Treasury is considering a supplemental leverage ratio exemption of up to 1.5% for major banks. This is the same type of liquidity injection we saw during COVID, and it could unleash massive capital into risk assets like Bitcoin. Second, the Genius Stablecoin Act isn't just about regulation, it's about infrastructure. When Wall Street banks can issue their own stablecoins and convert cash reserves into digital assets, we're talking about a fundamental shift in how money works. Third, and this is where it gets really interesting, the Iran-Israel ceasefire has removed a major geopolitical risk factor. As Hayes puts it, ignore the reality. Trump, Bibi, and Khamenei are all pretending the conflict is finished, so investors should too. Risk-on sentiment is back, and Bitcoin is the primary beneficiary. Cas Abe, a widely followed cryptocurrency analyst, made a comparison that gave me chills. He said buying Bitcoin at $108,000 today is like buying it at $20,000 in 2020. Think about that for a moment. If he's right, we're not at the top, we're at the beginning of the next major leg up. The options market is also telling a story. Vikram Suburaj from Gyotos pointed out that we have a $20 billion options expiry coming up on Friday. The order book data shows massive interest near $111,000, which could act as a magnet for price action. Let's zoom out and look at the global picture because macro events are absolutely crucial for crypto trading success. The regulatory landscape is shifting faster than I've ever seen. Hong Kong is implementing its stablecoin ordinance on August 1st, creating a clear framework for stablecoin issuers. This isn't just about Hong Kong. It's about Asia positioning itself as a crypto hub while the US gets its act together. But here's the flip side. Barclays Bank just announced they're banning credit card crypto purchases starting June 27th. This shows that while institutions are embracing crypto, traditional banks are still playing defense. This creates opportunity for those of us who understand where the market is heading. The political winds are also shifting dramatically. Trump's administration has made crypto a priority, with promises of a strategic Bitcoin reserve and crypto-friendly policies. When the President of the United States is launching his own crypto token and talking about making America a digital asset hub, you know we're in a new era. All right, let's get to what you really came here for. The exact strategy I'm using for the next 24 hours. Here's my game plan. And I want you to pay close attention because timing is everything in this market. For the long side, I'm watching for a break above $108,500 with volume. If we get that breakout, I'm targeting $111,000 as my first take profit level, with a stretch target of $115,000 if momentum continues. My stop loss is at $106,500, giving me a solid risk-reward ratio. The key trigger I'm watching is the 4-hour candle close above $108,500. We need to see sustained buying pressure, not just a quick spike that gets sold into. Volume needs to be at least 20% above the 20-period average for me to consider this a valid breakout. For position sizing, I'm risking 2% of my portfolio on this trade. That might sound conservative, but in a market this volatile, capital preservation is key. I'd rather make consistent profits than blow up my account chasing the perfect trade. If we break down below $106,000, I'm flipping bearish short term and looking for a test of $104,000. This would be a buying opportunity for longer term positions. But for day trading, I'd be looking to short the bounce. The options expiry on Friday adds another layer of complexity. Market makers will likely try to pin the price near max pain, which appears to be around $107,000. This could create choppy price action, so I'm prepared to take profits quickly if we get the move I'm looking for. While Bitcoin is the main event, let's not forget about altcoin opportunities because some interesting setups are developing. Ethereum is showing relative weakness, but that could actually be a contrarian opportunity. If Bitcoin breaks higher and drags the market with it, ETH could see a catch-up rally. The ETH-BTC ratio is at multi-month lows, which historically has been a good entry point for Ethereum positions. XRP is another one to watch. The regulatory clarity around Ripple has created a strong foundation, and the technical setup looks similar to Bitcoin's chart before its explosive move past $100,000. If we see broad crypto market strength, XRP could be a major beneficiary. Solana has been consolidating around $143, and a break above $150 could trigger a move toward $170. The ecosystem continues to grow, and institutional interest in SOL is increasing. Now let me talk about something that separates profitable traders from those who blow up their accounts: risk management. The next 24 hours are going to be volatile. We have major technical levels in play, massive options expiry coming up, and institutional flows that could move the market in either direction. This is not the time to go all in on a single trade. I'm using a tiered approach. If we get the breakout I'm expecting, I'll take 30% profits at $110,000, another 30% at $111,000, and let the rest ride with a trailing stop. This ensures I capture profits while still participating in any extended move. The key is to stay flexible. Markets can change direction quickly, and what looks like a breakout can turn into a fake out in minutes. That's why I always have my exit strategy planned before I enter the trade. Here's the bottom line. We're at a pivotal moment in crypto history. The institutional adoption we've been waiting for is happening right now in real time. The regulatory clarity is coming, the political support is there, and the technical setup is absolutely beautiful. But remember, trading is about probabilities, not certainties. The setup I've outlined gives us a high probability opportunity, but markets can always surprise us. That's why we use stop losses, position sizing, and proper risk management. The next 24 hours could be the start of Bitcoin's next major leg higher. If Arthur Hayes is right, if the institutional flows continue, and if the technical breakout materializes, we could be looking at 115,000 Bitcoin by the end of the week. But even if we're wrong, even if we get a pullback, the long-term trajectory is clear. Institutional adoption is accelerating, regulatory clarity is improving, and Bitcoin is cementing its position as digital gold. So here's what I want you to do. Set your alerts at $108,500 and $106,000. Watch the volume, stick to your risk management rules. And remember, in this market, patience and discipline beat FOMO every single time. If this analysis helped you, smash that like button, subscribe for daily crypto insights, and hit the notification bell so you never miss a market update. Drop a comment below with your thoughts on where Bitcoin is heading next. I read every single one. Until next time, this is Boni reminding you to trade smart, manage your risk, and remember, in crypto, fortune favors the prepared mind. Peace out, crypto warriors.